My name is Bo. I'm a mortgage loan officer, and this is Russell, a real estate broker or agent, however you would like to call
All
it.
the same.
Realtor. And this is this is real estate after hours. Russell, why are we here?
I think you and I have these conversations off mic all the time. And what we talk about is what didn't go well in a transaction that we want to fix, we want to get better at, we want to provide better service for our clients. And we have these candid conversations. And then it's like, what do we do with that? It does change our performance, changes the way we treat people, changes the way we do business. But I think some of this is just knowledge that needs to get out into the bigger knowledge base of people. And so I think today's conversation specifically is about what it looks like to have a really well-built package when it comes to your lender when you're making an offer. And I think we'll start with just this basic idea. Lay out real quick for us, Bo, the difference between what we call pre-qualification, pre-approval, and an underwritten pre-approval.
So pre-qualification is the most basic high level of any kind of a qualification. So you go online to anonymous lender, you type in, how much, I don't want to get kicked off immediately, but so you put in your income, your assets, you put in, ballpark idea of where your debts are. And then it goes, based upon just the information that you put in here, you're potentially pre-qualified for X number.
Totally. Basically, it's an online calculator that gives you a piece of paper that says, here's the outcome.
And it can seem official. There's the press button, get mortgage thing to give you a reference point. That's kind of what they do. A pre-approval is where there's actually looking at your income, actually looking at your assets, actually looking at, all your debts and all those different things of that nature. And then we actually run it through, if it's in a conventional loan, an automatic underwriter that gives us a thumbs up or thumbs down. Totally. Or, hey, look, you need to work on this. And then you actually get a pre-approval. The last is, an underwritten pre-approval where we take the full package, we put it through everything we did for a pre-approval, and then we send it off to a real live underwriter, and then they verify it. And they go, hey, look, you're underwritten up to this amount. And so you are underwritten for up to 600 with 5% down, then anything under that, you're pre-approved for. So pretty much you can expedite closing, and all you have to do is order the appraisal.
Right, which becomes a big deal when we get to the spot where I come into the mix with the same client. Let's say you're representing somebody and you're helping them understand their financial means, and we come and approach a house, this is the house we want to go after, they're qualified for it. When we start building the offer for them, it isn't just a dollar amount. It's not just how long it's going to take to close the deal. It's not just terms, a whole other conversation we're going to have coming up shortly about how to build a strong offer on terms.
Yeah.
But this conversation and this part of the offer is the financial strength of the individuals who are making that offer. So talk to me for a second. When we are putting an offer on the table on behalf of one of your clients, what are you looking for in making it as strong as possible when you're doing that pre-approval for them?
Making it as strong as possible is looking at, number one, setting their goals and seeing hey, look, where do you want to be with your goal? Is it, I want the max, or this is where I want to be comfortable?
Sure.
And I always leave a little cushion. I never tell someone their true max, because you never know what property taxes are going to be. You never know what home insurance is going to be, or HOA, or those different things, depending on where people are looking at their homes. So leaving that little cushion and going, hey, look, based upon that, this is your strongest bet, right?
Totally.
Yeah.
So when we're let's take this for a second, just run down that rabbit trail for a second. We have two different qualified buyers. Talk to me for a minute about how you can have two people qualify for the same amount of money, let's say $500,000, but have two very different pre-approvals, and how that might be received from a selling person's perspective.
Yeah. If you have somebody who's pre-approved as a first-time home buyer, they're pre-approved for 3% down on $15,000 down. So $485,000 mortgage is what we're qualifying for them for. And that's what, hey, look, it works on our side. That income ratio works. Everything in that scenario is good. For someone who puts 20% down, they might be perceived as stronger, but it could be where they have to put 20% down or more to even qualify for that $400,000 mortgage.
Right.
So just because someone's putting less down doesn't necessarily mean that they are less qualified within that. And I don't know, we were talking off camera that you had different thoughts.
Yeah, this is where we kind of disagreed on this. And I love the perspective you have, because like you said, sometimes it's wise not to put all of your money in the purchase.
Yeah.
So you may have money you're not using, and that doesn't show up in the pre-approval necessarily. But when I'm representing a seller, and let's say we get two offers on a competitive situation, and buyer one is very low money down,
Yeah.
and they're taking out a big loan to purchase that property, compared with someone who's got more money down and they've got a smaller loan. One of the things I'm trying to coach my seller to understand is we have a hurdle coming. And one of the jobs that we're trying to accomplish early on, even when we're getting this offer in hand before we even accept it, is understand how do we minimize as many hurdles as possible. Because ultimately the goal for everybody involved in this transaction, whether it's the buyer's agent, seller's agent, lender, is we all want the same outcome. We want to get to closing. We want the house to be sold from seller to buyer. And if we can't accomplish that, then there's no sense accepting that offer.
Yeah.
We need to keep looking, right? But one of the things we're looking at, if you've got more money you're putting down and you are able to give some strength behind that offer with that bigger cushion,
Yeah.
a hurdle we're gonna come up against later is the appraisal.
Yeah.
And that is an assessment independent of you and I and anybody. And they say the property is worth X amount of dollars. If that amount is less than the offer that has been made by that buyer, we have a problem.
Yeah.
And that problem can be big enough to scuttle a whole deal. But one cushion we have with more money down, with more options to overcome.
Assumed more.
We assumed there's more options.
Yeah.
We don't know all the financial picture behind the buyer you're representing.
Yeah.
But we have a better sense that maybe we can get further on the road. And sometimes it goes so far as, especially with an underwritten approval, when you start as a lender looking at a property, there's times where you can look at it and say, there's enough money down. We can just waive the appraisal.
Yeah.
We don't have to do one as a lender because there's so much money on the table. We're confident the loan writing is going to be safe.
Yeah.
So I think those are the things I'm coaching my seller through, and how it can be different. Like when we're writing offers to win, it's important to understand what is being conveyed between the lines of the kind of pre-approval you're getting.
Well, that's why the listing agent reaching out, or the lender reaching out to the listing agent of going, hey, look, what's behind this letter? Because I like to look at a pre-approval as a living document, right? Because like you're making multiple offers on different homes, that letters might change as long as you are approved for it, as long as the numbers work, it goes. But when I talk to a listing agent, I'm going within reason, sharing like, hey, look, there's the strength of the borrower because they've got good credit, they've got a good job, they've got the down. The money is liquid. Sometimes that comes into factor of, I've got a large down, but I'm liquidating a 401k. Sometimes that can play factors, right?
Yeah.
And if the money isn't liquid, I'll say money's not liquid as of yet, because as a team, to get across that finish line, we have to know these type of things.
Completely. Well, and this is the thing. Like, again, pulling the curtain back, like there's some bullshit in this industry when it comes to people pretending everything's fine when it's not.
Yeah.
Right? Like I've had offers come into my inbox in the dead of night with no context. Literally, it's being dumped in my inbox from the service provider who is helping that client, that buyer, sign documents. It comes in, and the agent who sent it, like, I don't know who the agent is, I don't know who the client is, I don't know if they're pre-qualified or pre-approved or what's going on. And they expect that to be good enough. Like, that's bullshit. And I think the lending side, I've worked with lenders before where you try to get a hold of that lender because they're in Corporation X. Good
East
luck.
Coast.
East Coast.
Different time zone, whatever.
I had one once where I was shuffled between 3 different representatives during the course of a transaction. And it was like, who is in control here? Who knows this client? Who can help me understand as a selling agent what's going on? Because the buyer's agent had no clue. So I think it's pretty amazing when you start thinking about this and we start giving advice here. The fact that you call on behalf of your buyer client and you're helping give context and helping give confidence to that seller that the people that they're looking at considering getting a binding contract with could perform on that contract. They can get it all the way to closing. I would just say that's rare. That's not typical within the industry. I think most of the time it's, this piece of paper here says they're good. And I got it online, and online clearly knows what they're talking about. All right, so boil this down for just a second as we close up. What advice are you giving when you're talking to your buyers and you're thinking about what's best for them? Tell me, what are you recommending? How are you helping them build a good offer based on their qualifications?
Mainly it's, what do they want? What's their goal? And then is that matching with reality? And then, if you have a good agent aside, like wrapping that all together with the offer of going, hey, look, maybe the house needs a little more work. We're a little bigger than what they thought. They don't have enough furniture. they'd like to get some of their closing costs covered. What does that look like? Like on my side, I can only go, hey, look, hey, if they're going to get some seller concession, that's great, but I can't craft it like you.
Right.
And so it's really trying to loop everybody in of like, what's the ultimate goal, which is to get this house with the amount of money that works for them, and whether that's, in which way or in that form of
Totally.
everything. So,
well, I mean, and what you're saying there, I think, is make sure you've got a team that works together.
Yeah.
Like there are times as a seller's agent, I have a buyer whose buyer's agent has never talked with the lender of the same buyer. And I'm like, wait a second, like, you're writing an offer on behalf of someone you don't understand their financial position, that this offer is contingent on their financial position. Like, blows my mind. So I think one of the things that you're saying here is make sure you've got the right people in the room, because even at the presentation, at the beginning, putting the offer on the table to that seller, it conveys a lot. It conveys a lot if your agent is actually willing to instill confidence in like the terms and the price and everything that goes into making sure this offer fits for that seller. If they're doing their best to build rapport with the agent representing that seller, then the lane where you live in, if you as a lender, if you as a buyer have a lender who's willing to say, I will get involved. I will pick up the phone and be an analog human with another analog human and tell a story. These are great clients. And this is what I understand to be true about their financial position. This is confidence I can give. It goes so much further.
Oh, for sure. And you said something right there that sparks, and is how I describe things to clients, is every loan tells a story. If there's a part, and when you watch a bad movie, you're like, okay, the beginning started out well, and then there was a really big like
something
plot glass, hole right here, and then you're like, and then the ending just kind of sucks. And that's the same thing. Like the entire story has to make sense.
Totally.
And so it has to make sense to the underwriter. It has to make sense to you. It has to make sense to the seller. And if we make the story make sense, then it does make sense. And then you get home.
And those are the ones like you and I sit and drink a beer afterwards. Like that was pretty fucking easy. Like it ended up being like that's what we wanted. That's how we wanted this to go. And there's some unavoidable pitfalls in stories, but when you can help see the bigger picture and help a client move down the road of that bigger picture, we get where we want to go. We get there smoothly. Cool. Dude, thank you so much. I super appreciate you. Love this conversation. Cannot wait for more.
Cheers.